Dorothy Callahan, 14 Maple Street, Steubenville, Ohio, 1955. Earl brought home $58 every Thursday. By Friday morning, it was sorted into 8 labeled envelopes before he finished his coffee, mortgage, groceries, gas, utilities, medicine, 3 kids, a mother-in-law in the back bedroom, and a bad knee 1 shift away from disaster. Dorothy had $7.40 left when the last envelope was filled. She put $5 of it into a green Folgers coffee can on the top shelf without a word. When Earl died in 1979, that can held $6,200. Nobody on the street could explain how a household that tight built that much. The can could. The whole machine was hidden inside 12 ordinary things their daughter Carol later learned to find embarrassing. Number 12. The envelope wall. Every Friday, the $58 paycheck went flat on the kitchen table. 8 envelopes, hand-labeled in pencil. Mortgage first, groceries second, then gas, utilities, medicine, shoes, electric, and the Folgers can last. When the envelopes were filled, $7.40 remained. That wasn't a remainder sitting there waiting to be spent. That was the wall between the family and a bad month. There was no overdraft protection, no card to float the gap, and no minimum payment to push the problem into next month. When the grocery envelope was flat, groceries were done. Not delayed. Done. Dorothy didn't need willpower or a financial advisor. She needed envelopes and a pencil. The envelope never lied to her. It never told her things were fine when they weren't. Number 11. The can on the top shelf. The green Folgers can had no label, no lock, and no written rule attached to it. Dorothy put $5 into it every Friday after the envelopes were filled. She never called it savings, never explained it to the children, and never discussed it with Earl. It sat in plain sight on the top shelf, untouchable by an unspoken agreement that ran the whole house. The Depression generation trusted objects they could reach more than banks they could not control. The can was not a financial instrument. It was the household's immune system, invisible until something tried to break the family and found it could not. Earl's knee went bad in 1961, and the mill cut his hours. The household did not collapse. The furnace cracked in 1967 and was replaced in cash. Dorothy reached up, counted out what was needed, and put the can back. It never earned a point of interest. It earned something harder to replace. Number 10. The layaway tag. In the fall of 1955, Dorothy needed a washing machine. A new one at Sears ran around $45. She put $5 down, accepted a layaway tag, and paid $4 a week. 10 weeks later, she carried the machine out the door, fully paid, owing nothing. 0 interest. 0 debt. By the early 1960s, Bank AmeriCard could have put that machine in her kitchen that same afternoon. Paid off over 18 months, with interest pushing the real cost higher. The Sears clerk would have called that convenient. Dorothy would have called it paying twice for something she only needed once. The tag was the discipline. The 10 weeks of waiting were the point. Number 9. The repair shelf. Earl's basement shelf looked like junk to anyone who didn't understand it. Baby food jars of sorted screws, leather scraps, rubber soles, a jar of contact cement. Saturday mornings belonged to Earl, and eventually to his eldest boy, too. Earl never gave a lesson. He handed the kid the leather punch, showed him where the sole had separated, and let him watch. Then he let him hold the boot steady. Then he let him do it himself. Risoling cost a fraction of a new pair. But the money wasn't the only thing staying in the house. Earl ran a free trade school in that basement every Saturday for a decade. By 16, the boy could replace a washing machine belt, patch a roof seam, and rewire a lamp without calling anyone. Those skills followed him into his own household and kept money there exactly the way they had kept money in Earl's. Knowledge stored on a shelf compounds the same way money does. It just doesn't show up on a balance sheet. Number 8, the Victory Garden in the side yard. Every spring, Dorothy broke open a 10 by 20 strip of side yard into a working pantry. Tomatoes along the back, beans down the middle, onions and potatoes at the sunny end, zucchini taking up whatever space was left. By October, the basement held over 40 mason jars, and the family ate through November on what the yard had grown. Victory gardens were a wartime requirement. The women who grew them during rationing didn't stop when the government told them they could, because they remembered what it felt like to need something the store couldn't provide. A productive backyard garden cut a meaningful share of the grocery bill on an income where every dollar had a job. No interest charged, no minimum payment due. Every jar on that shelf was a month of insurance, paid in full before winter arrived. Number 7, the second life of everything. Nothing left Dorothy's kitchen declaring itself finished. Bacon grease came back as cooking fat later in the week. Bread heels became pudding before they were allowed to go stale. Soap slivers collected in a dish all week and pressed together into a new bar by Sunday evening. Coffee grounds went into the garden. Each habit saved pennies on its own. Together, across a full year, they recovered a steady sum in purchases that never had to be made. The object got to decide when it was done, not the person who first used it, not the store selling a replacement, not a convenience that hadn't been invented yet. The kitchen ran a second shift on everything the first shift left behind. Here is the number worth sitting with. In 1950, the average American household carried $533 in total debt. Today, that number is over $31,000, on incomes far higher than anything Earl ever brought home. Dorothy ran 8 envelopes, a coffee can, a garden, a repair shelf, and a grease jar on $58 a week. Carol got her first Bank AmeriCard in 1964 and never labeled an envelope in her life. She called the old system embarrassing. She retired with a mortgage still outstanding. Number 6, the lunch pail rule. Dorothy packed Earl's lunch every morning at 5:45. 2 sandwiches, an apple, and a thermos of home-brewed coffee. The dented black steel pail went out the door with him every day for 30 years, and Earl never ate at the mill canteen. The canteen charged many times what Dorothy's packed lunch cost each morning. The gap between the two added up to real money across a year, and the arithmetic held at any salary level. The pail was dented and ugly and smelled like old coffee. The arithmetic behind it never was. Number 5, the mortgage rounding. The mortgage required a fixed monthly payment. Dorothy sent a few dollars more every month without telling Earl and without calling it a strategy. That quiet, consistent prepayment shaved several years off the total loan term. The house was paid off ahead of schedule with no refinancing and no announcement at the dinner table. She called it rounding up. The Depression had taught her that the loan was the vulnerability and that owning the house outright was the only security no bad month could reach in and take away. Years of freedom, bought a few dollars at a time for 2 decades. The house did the talking when it was done. Number 4, the neighbor economy. Tuesday afternoons, Dorothy watched the Moran children while their mother worked. Thursday afternoons, Mrs. Moran watched Dorothy's 3 while Dorothy ran errands and took on alteration work. No money changed hands. Earl borrowed Pete Moran's pipe wrench in spring and helped paint his fence in August. Extra zucchini went over the hedge when the garden came in heavy. Surplus canning jars came back the other way before the next season. The block was the backup system before credit became the backup system. It ran on trust and small reciprocal obligations nobody tracked, because tracking them would have broken what made them work. When families moved to cul-de-sac suburbs in the 1960s, that economy disappeared almost overnight. Privacy cost money the moment neighbors stopped being the safety net. Number 3, the shame of debt. In 1956, Dorothy watched from the kitchen window as a truck pulled up to the neighbor's house and took back the living room furniture. Bought on installment, defaulted on, repossessed without ceremony. The sofa, the chairs, and the end table went out the front door the way they came in. The debt stayed with the family. In working-class Steubenville in 1956, a repossession was not a private transaction. The whole street watched the truck. By 1965, Bank AmeriCard made the same event completely invisible. No truck, no neighbors watching, just a minimum payment rolling into the following month, and a balance that never reached zero. The debt remained exactly as it always had. The shame that once served as the warning was gone, and without the shame, the warning went with it entirely. Number 2, Earl's mother's room. Agnes moved into the back bedroom in 1953 with 1 suitcase and a modest Social Security check. Earl didn't calculate the household impact before making the decision. He brought her home because that was what you did when a parent had nowhere else to go. But the room was load-bearing in ways nobody discussed out loud. Agnes was there every afternoon when the kids came home from school, which meant Dorothy could take on alteration work without paying for supervision. She peeled vegetables, ironed through the week, and sat with the youngest through scarlet fever in 1957. After-school childcare cost money by the hour that the family never had to spend. Agnes provided it every year for 12 years without an invoice. When she died in 1965, Dorothy didn't calculate what the room had contributed. She cried about the quiet that replaced it. The back bedroom was never a burden. It was the column holding the ceiling up. Number 1, the rule Dorothy never said out loud. In spring 1958, the mill gave Earl a raise, roughly $16 more a month after taxes. Dorothy heard the number, nodded once, and changed nothing. The same 8 envelopes. The same amounts in pencil. The $16 went into the Folgers can without discussion, without celebration, and without a single change to the weekly routine. Carol was 12, and remembered standing in the kitchen thinking it made no sense. They had more money. Why weren't they doing anything with it? The answer was the rule Dorothy never said out loud. A raise is not permission. Every raise Earl received went into the reserve because Dorothy understood the good months were temporary and the bad ones were guaranteed. A household built on its best income collapses the moment that income drops. She built on the floor and kept the ceiling money somewhere it couldn't be spent by accident or optimism. Carol's salary increased in 1971. She upgraded the apartment, bought a newer car, and opened a second credit card to cover the distance between what she expected her life to look like and what she actually had. She called it living her life. Earl died in 1979. The house was fully paid off. No card debt, no outstanding loans. The folios held $6,200. Carol found it in 1980 while clearing the house and had no idea what she was looking at. She had several credit cards by then and nothing set aside. She is not unusual. She is the norm. The can still smelled like coffee. The system it had contained for 24 years had been replaced, not by something better, but by something that felt easier right up until it didn't.